Hello, everyone. I'm Rina, who aims to be the best book commentary library channel in Japan. Today, I would like to take a step further and think about the psychology of winning in trading. We often hear that in order to succeed in trading, not only analytical tools and techniques but also mental aspects have a big impact. But what exactly should we do to get our minds in order? It's not just about calming down. This time, we will be looking at Mark Douglas's The Zone, A Guide to Market Psychology, a famous book on market psychology. This book explains in detail the psychological state required to achieve consistent success in trading and the factors that separate winners from losers. The zone in the title is not just a state of concentration, but the ideal mental state that traders should aim for. In this article, we will break down the key points of this book and tell you how to use it in actual trading. In addition, we will delve deeper into the mindset of successful people based on the 7 beliefs that will make you a consistent winner. Don't just read it, but let's find hints to actually put it into action together. So, first let's look at the background of what the zone in trading is. 1. What is the zone in trading? The zone in trading is not just a state of concentration, but a state of mind where you can make instant decisions without any fear or hesitation. In this state, you can calmly respond to market movements while eliminating emotions, so you can naturally choose actions to win. In the world of sports, it is sometimes expressed as getting into the zone, and this concept is also used in trading. For example, let's say there are two traders, A and B. While A gets excited about market movements and emotionally changes his decisions, B calmly continues to trade as planned. B is a typical example of a trader who maintains a mental state of the zone. By maintaining this state, you will develop the ability to respond appropriately to any market fluctuation. The key to reaching the zone is to overcome fear. This fear is the feeling that, I might lose money, or what if I fail the next trade? To overcome this, it is important to accept the uncertainty of the market and see winning and losing as a natural series of events. Once this awareness is established, your trading consistency will improve, leading to long-term success. Next, let's look at some specific ways to achieve this zone. 2. Specific ways to achieve the zone. To reach the zone, you need to be mentally prepared and take specific actions. Here, we will delve into practical approaches to risk management and consistency. First, it is important to define risk and be prepared to accept it. When trading, clearly set your stop-loss point and the range of risk you can tolerate in advance. For example, if you decide that a loss of 10,000 yen is an acceptable range for a trade, do not risk more than that amount. This allows you to view losses as a cost in your plan in advance, minimizing anxiety and regret. The next step is to follow your plan and not be swayed by emotions. Many traders who suffer a losing streak are driven by the desire to make up in the next trade. However, emotional trading tends to break the rules, which can result in even bigger losses. Staying calm and accepting losses as part of your plan is an essential element of staying in the zone. In addition, it is also effective to try to trade systematically. For example, by repeatedly verifying effective methods through backtesting based on past data, you will be able to trade with confidence. By doing so, you will be able to deepen your trust in your rules and proceed with trading calmly without being swayed by emotions. Next, we will explain in detail the 7 beliefs for entering the zone. 3. 7 beliefs for becoming a consistent winner. To achieve the zone, traders themselves need to have firm beliefs. Mark Douglas advocates 7 beliefs for becoming a consistent winner. These beliefs guide your actions in trading and embody the mindset that successful people have in common. Let's look at each one in turn. Objectively recognize your advantages. In trading, an advantage refers to the likelihood that the buying and selling rules you adopt will generate profits in the long term. To recognize an advantage, you need to analyze past data and verify with numbers how reliable the rules are. For example, if you can confirm that the back test has a 60% win rate, you can continue trading with confidence based on those rules. Decide the risk in advance for every trade. Before you start trading, it is important to clearly set the amount of loss you can tolerate and the stop-loss point. This habit will serve as a bulwark to prevent you from being swept away by sudden emotions. If you start trading without determining the risk, you are more likely to suffer large losses. Accept risk perfectly. Losses in trading are inevitable. However, it is important not to see them as failures, but to recognize them as part of your plan. If you are prepared to accept losses, you can calmly cut your losses and focus on the next opportunity. Follow your advantage without doubt or hesitation. When you suffer a losing streak, you may feel uneasy about your rules and hesitate to enter. However, it is important to believe in and follow the rules that have established an advantage. This will prevent opportunity loss and increase the chances of long-term profits. Seize the profits made possible by the market. It is important not to impose your own convenience on the market. Emotions such as, "I definitely want to win next time," or "I have to get it back here," will prevent you from making proper decisions. Be prepared to calmly accept the profits the market offers. Monitor mistakes and continue to improve. There are two types of mistakes in trading: simple human error and emotional misjudgment. Both need to be carefully monitored and improved. For example, it is a good idea to set up a checking system to prevent mistakes such as entering the wrong lot number when entering and emotionally breaking the rules. Accept the possibility of the unknown. The outcome of a trade is never completely certain, no matter how many predictions you make. Accepting this uncertainty and acting on the premise that, "I don't know what will happen," will lead to calm trading. By practicing these beliefs, traders will be able to remain consistent and not be swayed by emotions. Next, we will consider how to use these beliefs in daily trading. 4. How to use beliefs in daily trading. Just understanding the 7 beliefs may be difficult to use in actual trading. Here, we will look specifically at how to incorporate these beliefs into daily trading. 1. Clarifying and verifying trading rules. The most basic of beliefs is to recognize your own advantages. To do this, you need to clarify your trading method and verify that it is effective. For example, backtest using past data to measure the win rate and risk-reward ratio. This will allow you to confirm whether your rules have a theoretical advantage and continue trading with peace of mind. 2. Developing and executing a trading plan. Related to the second and third beliefs is to create and follow a trading plan. It is effective to make a plan like the following. Entry point: decide in advance at which price range to enter. Stop loss point: set the timing to stop loss based on the amount of loss you can tolerate. Profit lock-in point: clarify at which price range to lock in profits. By making a plan, you can reduce emotional decisions during trading and act calmly. 3. Psychological preparation and rehearsal. To overcome fear and anxiety in trading, psychological preparation is also necessary. Repeated simulation trading before actual trading and gaining experience in the real market can reduce anxiety. It is also effective to adopt a ritual to calm your mind, such as taking a deep breath before trading. 4. Utilizing trade records. Every time you trade, record it and reflect on your behavior and psychological state. Recording the following points will make it easier to analyze. Reason for entry. Timing of stop loss and profit lock. Psychological state and emotions at that time. This will help you understand your behavioral patterns and find areas to improve. 5. Prepare for unknown situations. The market is constantly changing and full of uncertainty. For this reason, it is impossible to fully predict what will happen next. Accept this reality and be prepared to calmly respond to whatever happens. For example, you can prepare for unforeseen circumstances by assuming multiple scenarios and planning actions to respond to each one. Incorporating these methods into your daily trading will lay the foundation for getting closer to the zone. Next, let's look at the effects of this approach and its applications in areas other than trading. 5. Effects and applications of the zone approach. Incorporating the mindset and methods for achieving the zone into your daily trading will not only improve your abilities as a trader, but it can also have a positive impact on your life and other areas. Here, we will look at the specific effects and areas where it can be applied. 1. Specific effects in trading. Stable results. The zone approach eliminates emotional decisions, which helps maintain consistency in trading. Trading based on consistent rules will produce stable profits in the long term. Reduced stress. Accepting losses as part of your plan reduces unnecessary stress and makes it easier to make calm decisions. Accelerated growth. Using your trading records to reflect on your actions and results allows you to make efficient improvements. 2. Applications in life. The zone approach can be useful in areas other than trading as well. Here are some examples. Business. In situations that require decisiveness and consistency, acting according to your plan will help you achieve results. Sports. The zone approach is also used by top athletes as a way to maintain high concentration. Relationships. Accepting uncertainty and being able to make calm judgments avoid interpersonal troubles and promote smooth communication. 3. Inner growth. Through the process of aiming for the zone, self-discipline and perseverance are strengthened. These abilities are universally important skills in any field and are of great power in various situations in life. By incorporating the zone approach into your life in general, you can achieve self-realization and inner satisfaction beyond mere trading success. Next, we will summarize the contents of this article and move on to the conclusion. Conclusion. Success in trading is deeply related not only to the superiority of technical analysis and methods, but also to the importance of psychological state. Mark Douglas's The Zone, A Guide to Winning Market Psychology, is a must-read book that shows traders the path to consistency and continuing to win in the long term. The zone advocated in this book refers to the ideal mental state in which one approaches trading calmly and with a clear mind, and makes decisions without being influenced by emotions or fear. To reach this state, the following mindset and actions are key. Clarify your trading rules and objectively recognize your advantages. Manage risk systematically and be prepared to accept losses. Practice the 7 beliefs to stay consistent and not be swayed by emotions. This approach is not limited to trading, but can be applied to a variety of fields, including business, sports, and everyday life. Accepting uncertainty and striving for growth while maintaining self-discipline are principles of success that are common to any challenge. Finally, the zone mindset goes beyond mere technical skills and is also a process of continually facing your inner self. Through this, you will be able to build not only a more fulfilling trading life, but also a richer life overall. Make use of this content to take your trading and learning one step further today.